Hey everyone, it's Ashin Joshi from ATFA Academy, and today we are going to be doing our part 2 lesson walkthrough for the financial mindset course. And this time we're talking about financial sense. This is our another section of the course, and going on the same ideas in the first section, we are just financial common sense. And this is such an important skill to have if you truly want to grow rich and create a brighter future for yourself. And so let's just get on with it. We're already talking about opportunity cost. So, opportunity cost, I want you to think of it like, for example, every single dollar you earn, you have potential to do something great. It could be a business, it could be investing in the market, it could be investing in yourself. And I'm not saying go on a shopping spree or whatever, but for like say you have a job and you want to look professional and you buy yourself whatever a reasonably priced suit. That's not a bad expense. And I'm not saying go buy an Armani suit for spend like a few $1,000s. I'm saying if you spend like a few $100 whatever, few $100 or whatever, is price doesn't price matters according to your income. I want you to remember that. Like I'd say ideally 10% of your income. Even that's too much. You shouldn't spend more than like let's say 5%. 5% is probably good on a suit or whatever investing in yourself type on the income wise. Like book like you can get books at the library. I mean if you're not the person who likes to have books that like other people have touched and everything, you're like a germaphobe, then there's the affiliate links on our books course, and that actually I'll actually write it clearly, books course, and that has all the courses with it has all the books that we recommend that would be the best value for your money. We do recommend getting it at the library, but if you do want to buy books, please remember to support us in buying those. And there's just a lot of good suggestions on there, so be sure to use that. All right. So let's go on to what is the opportunity cost like of a person selling her stocks and bonds worth $5,000 to spend on a winter vacation. So this is part of the problem of opportunity cost is that you're taking it out your cash so that you don't let your investment continue to grow. That's what opportunity cost is. It's for example like if I own this business that's producing 100K a year and it's now worth, let's say it's now worth $2 million, 100K profit, and I see a bigger investment opportunity that could be worth, it could make 200K and it's the same price, and I sell this property and put it in there, then that's good. But for example, this is what opportunity cost is. It's like if instead of that I took out the 2 million to just party, buy a buy a boat, a fancy sports car, that's opportunity cost. You missed out on 100K profit return to all these things that are liabilities. And that's definitely not the mindset we try to teach at ATFA. And so please be aware of when you're taking out money out of your investments or anything like that, realize, are you making the same return? Are you making more? 5,000, is it going to be greater than the new investment? In this case it's not. And there you go. So the opportunity cost is the loss of the chance for the money to go grow in value. So it's as simple as that. But It's such an important term to know. While maintaining financial records, accountants often record transactions using a system that affects these two accounts. This system is called double, as you can see, two accounts. So whenever you see this, I want you to automatically, you should have a light bulb that it's saying two. So we already know it can't be custom entry. Then we see by level. It doesn't make sense necessarily because we're recording transactions, and so it only makes sense, and it does not talk about a week, so we know that automatically C is out of the equation as just a D. So that's what, not everyone's gonna know what this is. I've been fortunate, I've studied so much accounting and everything, but not everyone's gonna know this, and that's okay. But the thing is, what's important is that you should be able to have such a financial background, such a strong base where you can, if someone were referring to this, you can just go like, yeah, yeah, I know, like at least the rough idea what it means. Like when I hear complex, it's like building your vocabulary. It's that there may be someone using context clues and using that to figure out what a word means. Like if I said I have such a financial acumen when it comes to the stock market and credit, taxes, all these other topics, you can assume acumen means knowledge, smart, like smartness, whatever. So just use context clues, same thing when it comes to this. We're really trying to give you the necessities to create your own type of financial mindset, because that's one of the mistakes our generation and many other generations make, is that we think do not think like the rich. If you want to be rich, you have to think like the rich. Okay, what is a distribution channel slash marketing channel? So when two companies combine money for ads in order to get a bigger, better ad. That does not work for our situation. Determines if plans are good or needs to be revised. Promoting a product only to the next institution down the marketing channel. The chain of individuals and organizations involved in getting a product or service from the producer to the consumer. So we can see distribution, marketing. So clearly, it has to be involving marketing. And this question tries to trick you, but that's not it. It has to be this one because we're talking about individuals and organization getting their product or service to the consumer. So channel, boom, just like that. Using skills beyond what we're teaching. On a stock table, net charge shows you the difference between net charge. So net is like total. It's like my, if you we said net profits, we would say like net cost everything. That would be like what you're taking home. So if we look at this, last year's average price and this year's average price, the day's closing price and the previous day's price, the highest and lowest prices for the day, the highest and lowest prices for the year. So now I want you to think deeply on this. Just try to envision. You probably don't know. You're probably thinking, what the heck is a stock table? There's a lot of questions that you're getting out of this, but what does it show you the difference? What is it trying to convey you? Trying to what can you ration out of this? Do you have an idea? Okay. I'm going to go and tell you. So the average price and this year's No, it can't be, because we're talking about net. We're talking about a stock table. It's something that is not too far from the last thing. We would look at for example, the day's closing price and the previous day's price. This is a lot closer time interval, and that's what we're essentially tracking. So let's let's keep it going. B is a good option. C, the highest and lowest prices for the day. That can't be it. And this is like 52-week highs and lows. So just did you get it? That was a bit different. I know. I just wanted to see how we've already done three questions. So I hope, like, just looking at that, you can better assess where, because not necessarily, no, none of us is going to know every single term, but what we can know is the best way to get the context clues to make sure that we have that investing vocabulary and that financial mindset we talked about earlier. So harmful to the economy, it can't be negative inflation. Think about it. What does hyper sound like? Hyper, jumping. That means jumping, jumping. Think about a hyper kid who jumps on the bed up and down. That irritates you, right? Makes you mad. Let's do a nice mad face. Mad. Think about a kid jumping up and down. That doesn't make anyone happy. So we harmful to your health, to your stress. Boom. Think about it like that. It can't be demand pull inflation. That's a different type of inflation. We'll go further into these different approaches. And cost push inflation does not make sense. These are just trying to trick you. It's as simple as that. And that's what wraps up our financial sets walkthrough. I hope you learned a lot. I want you to really take away key things from this. Is like we talked about, your job in this, your whole goal in this unit, to learn how the rich think, just like our phrase, because only then can you grow rich and grow, like in our logo, that leaf into a full golden circle and truly maximize how much money you make. Other than that, I'll see you all in the next one. Thank you.